Well, first of all, gold is the primary currency metal. And when they do the overnight resets, this is what they reset it against. And though both gold and silver are used in every single aspect of the global economy, silver is more manufacturing and industrial. Gold is more monetary. So there is a difference. For me personally, I use silver for barterability because, this is an ounce of silver and it's just easy to buy with a tank of gas, etc. And also historically, yes, they have different functions. So that's what I like silver for, is my barterable part of my portfolio. Gold, on the other hand, is my wealth preservation. It's also for positioning to take advantage of the opportunities that it always present in a crisis. And it's also for legacy building, because for me, that's very important, having children and grandchildren and eventually great-grandchildren, etc. So there are absolutely different functions. And I think that and then there's different kinds of silver and there's different kinds of gold, even inside of those categories. It's not blanket. Using spot gold, which is never referred to as spot gold, it's just referred to as gold. It's not gold, it's a contract, right? Cheap, easy to manipulate. They can create as much gold and silver that do not nor ever will exist as they want to. And it's never about the physical. But what's been actually happening is there has been a decoupling between the spot market, which is, it's still a better performer than any other asset this year, pretty much. But the spot market versus the physical market, where we are seeing premiums expand on the lower, more base quality gold and certainly silver, and on the collectibles, which is what I personally buy. I don't buy bullion because they've been covertly confiscating it from you your whole life. Kind of hard to imagine at the very end they're going to go, you get to keep that well. Maybe they will. I can't say one way or the other, but I kind of like a what if I'm right or what if I'm wrong, right? So there are definitely different kinds, but all of it, you hold it, you own it, it runs no counterparty risk. And once you get it out of the system, it basically is invisible to central bankers or to anybody else. That's why they don't, that's one of the reasons why they don't like it. So we have a strategy that I actually developed when I was doing all my studies on currencies and currency life cycles. It's just based on repeatable patterns. It's simple because, look, I can't guarantee what's going to happen tomorrow. That's outside of my control. But I kind of feel like if something's happened the same way 100% of the time and you're doing the same thing, well, I don't think this time is different. I think you are more likely to get the same kind of result. And when all confidence in this Ponzi scheme is gone, they will do, I don't know how many overnight resets, but they will do overnight resets. And they will do it against this because this is all intrinsic value. When you are going into any kind of battle, would you rather have one little instrument, or would you like a whole arsenal behind you? I bring that up because any of the fiat money products, the derivatives, the dollars, the stocks, the bonds, okay, basically, even though we've been taught that it's diversified, they're all dollar-based. It's not diversified, and it's used in one place, and that's the financial area. Whereas with both gold and silver, they are used in every single sector of the global economy. So they have the broadest base of buyer. Yeah, based on supply and demand, they're going to fluctuate, but they never go to zero because there's always demand. we knew that gold was in a long-term positive trend. So that's the right church. Now you got to get into the right pew. And again, it's hard for me to imagine after they've been confiscating my wealth since 1954 that they're going to suddenly stop at the end.
Right.
So when I'm making choices, it's always, I want to look and see what are the big kahunas, what are the big players doing for themselves? So I like to look at the rarity index. And the rarity index, I mean, those coins in there, you might have a coin, 1 ounce of gold for like $8 million or more, 15 million. Now, who can afford that? Only the 1%, right? And these are also the people that either write the rules or have the ability to influence those that write the rules, but they are more in the know typically of what is going on than the normal Joe on the street. Very, very wealthy people are buying in big, because it's really a huge breakout. On the lower level stuff, that's more what like you and I would buy. There has been a breakout. That breakout is growing, but it just recently started. So the smart money was already there. And so, yes, I do think it's going to continue because the big money, that's where they're going. And where else are you going to go? I mean, honestly, 4 years ago, you were probably buying it at pretty much the most compressed that they were historically, right? So that's why you did so well. But that premium is growing. The biggest reason, I mean, so that's one of it. And that's one of the reasons. And you're looking at things that are super rare, even in the common dates, compared to how many bullion coins they mint, they're still super rare.
Yes.
And it's always, it's a true demand and supply market, but honestly, the biggest reason, it's not even, the taxable, because all good citizens should always pay all taxes that are due, though these are not reportable. So you get to choose how you want to handle it. But it really is about a potential confiscation. I mean, it's not like it hasn't happened in this country more than once. Last time was 33, but manipulating, and we talked about Greenspan coming out and saying, well, what if we just kind of tweak the gold price a little bit? That would have an impact on psychology. So why are they trying so hard to keep people away? And I don't know, and this is not something I can exactly prove,